Welcome, please. We have a session, Pay as a Platform. So, please tell us your company, your name, and a bit about you, and why you're up here on stage. Ladies first, of course.
Thank you. I'm Chloé Mayenobe, working at Natixis Payments. Natixis Payments is the payment body of Natixis, backed by BPCE. We operate on the full value chain of payments, so from issuing, processing to acquiring. And why I'm here is that we launched last year a product together with Visa called Exponence, which is a payment as a service product.
A payment as a service?
Payment as a service.
So I'm being a very stupid person here. Explain me, what is payment as a service?
I think it's the whole purpose of the 20 minutes we get. So payment as a service is a platform operated in a SaaS mode, allowing any fintech, retailer, corporate to issue a payment mean backed by us. We would lend our capabilities in terms of regulation, of issuing, of customization of everything in order for them to get their program with payments.
My name is Shtilman, and I'm the CEO and the co-founder of Rapyd. Rapyd is what we call a fintech as a service platform, or described by others as the Amazon AWS of the fintech space. We basically provide one full-blown platform that is API'd, that operates across 105 countries across the globe, and provides the ability to collect, disburse payments, issue cards, and provision wallets for consumers and businesses. And basically it handles everything that you need as a business in order to build a fintech or a payment solutions on top of a single API globally. We are, of course, a regulated entity. We touch the money. So when somebody comes to our platform and gets onboarded, the only thing he needs to do is basically to plug in the API, and he can transact completely globally and build, very nice use cases on top of our platform.
So you've both used different, this is why I asked you to define it, because you both use different terminologies, and then we've also got banking as a service out there. We've got old-fashioned program managers. Maybe I'm being really silly. I'm not seeing a big difference between all of these different describers to basically delivering a solution.
There is a big difference, right? First of all, let's start with the difference between program managers and, and fintech as a service or payments as a service. First of all, if you don't touch the money and you only provide the tech element of doing some of the technological aspects of it, it's not good enough, because you basically send your customer, which is the company or the business that you're working in, to do the heavy lifting or getting his own bank accounts, dealing with the regulators, and basically signing all these deals on its own. And from a BD perspective and go-to-market time, you're sending them to a very long 12 to 18 months process. And when you look at a fintech as a service or a payment as a service platform, they don't need to do any of that. Literally, on our platform, you can onboard yourself in 2 minutes or a day, depending on the KYB requirements, and start transacting in 105 countries across the globe, moving money, collecting money, and doing effects, or doing anything that you might need without actually going through a 3, 8, 12 months process of a program manager. Now, banking as a service, is different, right? It's really opening accounts, storing, funds in custody, but banking as a service typically is very regional or in a single country, while what we do is completely global. So from our perspective, we provide our customers the ability to do business everywhere, not only in Europe, but also in Indonesia, in Brazil, in Mexico. And from their perspective, it looks exactly the same. So the API and the connectivity allows them to transact in each and every one of these countries exactly like they transact in the European Union. And that's the key difference between something that is called fintech as a service versus a banking as a service that would give you, for example, virtual IBANs or SEPA in Europe.
There's also a very different way of approaching, which is the customer is highly different from what it used to be. It used to be a financial institution customer, while with PSD2 and a change in regulation, the customer is now either a retailer, either a fintech, either a corporate. So those people don't have their so technology is there to ease their process, to create value for them in the way they enter into relation with their own customers, but it's not a finance to finance talk anymore.
Okay. Now, when I look around the world, in most industries, that you would be classed as a wholesaler, a manufacturer. And certainly when we look around the world, if I make biscuits, the retailer, the one who sells the biscuits, is the one who controls the eventual margin to the end user, and generally is the one that makes the highest margin, not the wholesaler or the manufacturer. Is that a big issue? Because you're almost sitting invisibly behind the scenes as the wholesaler, the manufacturer of it all, and yet you don't control the front-end retail customer for the margins, basically. So you're getting squeezed, surely, because...
So not really. For example, in our business model, because we are the infrastructure that everybody builds on top of, we are actually the part that controls the margins, right? The fact that, for example, a company like an Uber, controls the consumer, doesn't mean they control the margins, because at the end of the day, they need the rails in order to transact with that consumer, and we as the infrastructure, we control the rails. And because we have, several services that we offer on top of our platform, and not only the ability to collect a payment or only to disburse or only to do card issuing, we actually control the margins extremely well because of the diversity of the solutions that we have.
Yeah, I agree. We don't play on the same ground of our customers. Okay, once again, the payment is not their core value. It's one of the value, one of the proposal they get on top of their full value proposition. We operate the payment. We operate the back office. We operate. So it has nothing to do between the old days and now. We are on the scalable technology. We are on the volume way of earning our money. So it is totally different from what it used to be.
And you could take it and equivalent it to the cloud computing space. Amazon with AWS, they control the margins, but the hardware is an Intel, CPU, and the disks are manufactured by somebody else. So it's the biscuits, right? But still, Amazon, as the infrastructure player, they control the margins.
Okay. Now, obviously, PSD2 fast coming in, and potentially a move away from what's often been in many markets card-based, although not in all markets, like the Netherlands, it is bank-based, but in many markets card-based transactions, to probably a much more bank-based type infrastructure of payments happening with PSD2 and PISP payments. I'm just seeing how you think this may affect your model. It won't affect it. Does it provide opportunities? Where do you see that feeding into your business?
Well, we are strong believers of PSD2 new means of payments, account-to-account payments, and our rails. We are agnostic. Our rails can just enter into a space with card payments or account-to-account payments. No issue on that side.
So it makes no difference to you?
No difference.
And on the margins, you can make as much money in one way as the other?
Yeah.
Yeah. So
why not?
we are actually a big believer in alternative payment rails, not the card rails. And we support today more than 1,000 different payment methods globally in more than 105 countries. And I think that PSD2 is a big leap forward to be able to provide much more advanced payment capabilities, more push payment capabilities that people can instruct moving money from their bank account to the retailer or to somebody else's bank account. We think it's actually the future of payments is in the push payments and not in the debiting or pull payments. And I think that PSD2 is a great step forward to bring the European Union into more advanced markets, which is actually Asia, for example, is in a much more advanced stage than Europe and the US, because it's push payments are growing like crazy there, and you see the wallets that exist there, if it is Alipay, WeChat, or GrabPay, or Gojek, that actually define the future of how people will pay, both on the point of sale and online, and everything is based on the fact that there are APIs and the ability to do push payments. So I think that PSD2 is amazing. Also from a margin perspective, when you don't need to pay the card schemes, then yes, your margins will be better.
But then it does introduce another layer of complexity with SCA and everything else. I mean, that has more costs and more hassle for you, or not really? You're saying it's just
not
technology?
Really. If you are a technological company and not a program manager that does paperwork and fax machines, then yeah, you will have margins and your tech will actually work and it will not be the challenge. As long as you build it the right way, you can scale it very quickly. And it's good for business at the end of the day.
Yeah?
Yeah. Technology is key. On that side, yeah.
But it is interesting, you're both operating pan-Europe, and whilst PSD2 is a maximum harmonization directive, it has huge variations across the whole of Europe. you know, you're both trying to operate across multiple markets. That must be causing a lot of complexities for you.
Well, that's why for us it's very key to be backed by a bank and Visa, because we use their ability also for regulatory standpoint, and we are able to answer any regulatory dedicated point on each market. So we accompany our customers up to the regulation. They are not. We do that abstraction thin layer for them not to have to think about this.
Yeah, and for us, it's actually the opposite. So instead of being backed by a bank or Visa, we are actually VC-backed. So it gives us a lot of money that was injected into the company to build the global businesses. We have amazing investors like Target Global, General Catalyst, Tiger, Code2, Oak, and others that basically believe in the business and allow us to build a very scalable and global business. We have regional R&D teams in every region that we operate in because of the need to be local and actually understand the local, differences in each one of the countries that we operate in. And this allows us to build basically solutions that from our customer perspective look the same. So a transaction in Europe looks exactly like Indonesia or Brazil, but behind the scenes we hide the complexity because of the massive technological effort that we did.
Okay. I mean, it was interesting you mentioned the word customers there. Maybe we could talk about your customers in terms of where do you see the majority, looking, not even today, but over the next couple of years, coming from? Is it more what I'm going to say is the incumbent brands, the Ubers and stuff like that, using your type of service to deliver their payment solutions? Or is it more the fintechs looking to you as a, whether it's the Visa Fast Track program or whatever, to get to market quickly? Are you more a method for fintechs to get to market with solutions quickly, or for incumbents to enter the payment space? Where do you see over the next couple of years your biggest base of customers coming from?
So our massive base of customers is coming actually from the big technological brands that want to become payment methods. The Ubers of the world and other companies in this scale, the 5 big tech giants that are using us. Basically, all these companies want to become payment companies. And in order to do that, they need infrastructure and they need global infrastructure, because for them, it's not good enough to operate in the US or in the UK or in Brazil. They want to operate completely globally. And they're basically using our technology in order to get into the fintech space or the payment space. So by definition, they're not defined as fintechs because they're tech giants, but they want to become, payment companies at the end of the day, or consumer payment companies, because the future is that the big brands are becoming the payment methods.
So you would argue you see your big customer base coming from brands, and let's just call them brands, not even tech, but brands who have customer bases looking to move into payments as being the next stage of their development and need for part of a big corporate strategy.
Definitely. Everybody's moving into payments. Every single brand is launching a wallet, an app. Pay with me. I will give you loyalty points, loyalty capabilities. So the brands are becoming the payment methods, and the brands need global infrastructure. And this is what we actually provide them globally.
Okay.
Yeah.
Same base for you or different?
No. Well, same base but different view.
Okay.
I would say that everyone don't want to go into payment. They want to add payment in order to add stickiness, to ease the relationship with their clients. They want to have a daily touch point with their client, and the payment is a daily touch point with the client. So that's just, once again, a part of their value, of their value proposition, but not the core of it. So they will, I agree on the tendency for them to go into payments, but not as a full strategy like core.
But if I follow this to a logical conclusion, though, with all of the big brands moving into payments, where does that leave the incumbents? Where does that leave the incumbents, the big banks and everything else? Because, effectively you're saying...
I will tell you, my equivalent to that. So if you look at the world of payments today, it looks a little bit like the world of the internet in the 1990s, right? It's before the explosion of the internet and the Amazons and the Facebooks and the Googles. It's right before that. I think banks are like the routers of the internet world. They're moving the money. But at the end of the day, the banks are not the infrastructure, and the banks are definitely not the application. The tech companies will be the infrastructure on top of the banks, and the brands are becoming the applications, which is equivalent, to websites in the internet. A website was written by a company that runs on top of Amazon in the AWS, but the router behind the scenes is a Cisco router, for example, that moves the data. And I think the banks will play in that place, but I don't see them actually becoming the infrastructure for other companies to build on top of, because they just don't have the speed or the technical capabilities in order to do that.
Well, we are part of an incumbent, so
That's why I was interested. Yes, because you see, you have a sort of two sides to you.
Yeah, so I would say that incumbents are also able to move when they
But they
decide
split you out almost as a separate operation.
Yeah, but still inside the incumbent. So the idea is to build or to have created a technology company inside an incumbent, and that's what we are.
Yeah. And the history shows it never works, but we'll see how it will do this time.
Look, thank you very much. I'm conscious we are between ourselves and lunch. It's been a really interesting chat. I've learned a lot, actually, about the definitions, and I might take you up on some of those conversations separately, because I do find it's very interesting, the difference between BaaS, payment as a service, program manager, and how you view things, because I think that the market is still at very big flux out there in terms of actually understanding who they should be talking to with the services they want. I think there's a lot of confusion out there, so it's been really helpful. Thank you very much to a great panel.
Thank you.